Hurricane Melissa passed near Florida just a few days ago, bringing strong rip currents, coastal alerts, and leaving thousands of roofs at risk. And the most concerning part, even though hurricane season has just started, insurance companies are no longer covering homeowners like they used to. Since July 2025, under the new Florida Law SB 1746, if your roof is more than 10 or 15 years old, your insurance may pay less than half of its real value, claiming depreciation. So, if your roof would cost $15,000 to replace today, your insurance company might only give you $8,000 or less. And yes, companies like State Farm, Allstate, and Citizens Property Insurance are already applying this rule, confirmed by Florida's Office of Insurance Regulation. And the best part is that I'll tell you what you should do right now to protect you, your family, and your roof. Hi everyone, this is Clay from Roofing Nation, a roofing company with over 10 years of experience. We specialize in high-performance residential and commercial roofing systems, designed specifically to withstand Miami's intense sun, humidity, and hurricane-force winds. We've already helped more than 50 homeowners and building owners this year alone. People who now live under safe, strong roofs that truly protect their homes. And believe me, most people would pay for the information you're about to hear in this video. But today, you're getting it for free. Since July 2025, insurance companies across Florida started using a new formula called depreciation to calculate how much they'll actually pay when you file a roof claim. Now, in simple terms, they reduce the value of your roof every single year, just like a car loses value the moment you drive it off the lot. But let me ask you this. When was the last time you checked how your insurance actually values your roof? So instead of paying what it costs to replace your roof today, they pay what your old roof is worth after 10 or 15 years of wear and tear. Let me give you an example. Let's say your roof costs $15,000 to replace new, but it's 15 years old. Your insurance company applies depreciation, so they might only pay $8,000 or even less, claiming that your roof lost value over time. Now, here's where most people get caught off guard. You still have to pay your deductible, which can be anywhere from $2,000 to $5,000 depending on your policy. If your roof got damaged tomorrow, could you cover a surprise $7,000 bill out of pocket? So by the time everything is done, you could end up paying more than $7,000 out of pocket and still not have a brand new roof, just a patch up or partial replacement. And it doesn't matter if you've been paying your premiums for years without missing a single payment. This new law changes how claims are calculated for almost everyone. The law behind this is called Senate Bill 1746, and it officially went into effect in July 2025. The Office of Insurance Regulation confirmed that insurers like State Farm, Allstate, and Citizens Property Insurance are already enforcing it in more than 80% of roof-related claims. Now, I really want you to understand this part because it's critical. Starting in January 2025, insurance companies must disclose in bold letters within your policy if they are using depreciation or actual cash value, ACV. But the truth is, most homeowners don't notice it until the worst happens, when a hurricane damages their roof and they realize their check is way smaller than expected. It's also important to understand the difference between ACV and replacement cost value, RCV. ACV means you get paid what your old roof is worth today after depreciation. RCV means you get paid what it costs to install a new roof with no deductions for age. So, if your policy says ACV, that's a big red flag. It means the insurance company has shifted the financial responsibility back to you. And this isn't just a technical change, it's a financial game changer for homeowners. Because if you're hit by another storm like Hurricane Melissa or even a weaker tropical system, you could be looking at thousands in uncovered repairs. For families on fixed incomes or homeowners already paying high premiums, this new rule can be devastating. You might still think you're covered, but in reality, you are only half covered. That's why we're seeing so many frustrated homeowners calling roofing companies after they get their insurance check and realize it's not enough to get the job done. And unfortunately, many don't find this out until after a major storm hits. Now, if you've been waiting for the part that everyone wanted to watch, this is it. Because this is where things get real for Florida homeowners. There is another active law in Florida that's catching homeowners off guard, and it's known as the 15-year rule. This law, updated in July 2025 under Senate Bill 2D and House Bill 1611, gives insurance companies the right to deny renewing your policy if your roof is 15 years old or older, even if your roof is perfectly good condition. This change was signed by Governor DeSantis, and while insurers claim it's meant to stabilize the insurance market, what it really does is put homeowners in a tough spot. Here's why. Insurers argue that older roofs are high risk. They say older materials are more likely to fail during hurricanes, especially in areas like Miami, Tampa, and Fort Myers. So, what's been happening since this law went into effect? According to the Tampa Bay Times, by August 2025, Florida saw a 280% increase in non-renewed homeowners insurance policies, mostly due to old roofs. Premiums have gone up between 20 and 30%, and many families have been forced into Citizens Property Insurance, which is the backup or last resort insurers of the state. But Citizens isn't always a great safety net. It's more expensive, has limited coverage, and because it's state-run, it often takes longer to process claims after a storm. And here's what that means. If you don't act quickly, you could be left completely uninsured right before hurricane season, which is the worst possible timing. However, there is one exception built into the law. I'll tell you this one, but keep watching because you will know more later. If you schedule a professional roof inspection and the report shows your roof still has at least 5 years of remaining life, your insurance company must allow you to keep your coverage at least temporarily. That inspection usually costs between $300 and $600, but it can save you tens of thousands of dollars in uncovered damages later. The problem is, most homeowners don't know this option exists. They just assume they're out of luck and they go uninsured, hoping no major storm hits. But with storms like Melissa and more predicted systems forming in the Atlantic, going without coverage is extremely risky. And to make things worse, many lenders now require active homeowners insurance. So if your insurance is canceled, your mortgage company can step in, add forced place insurance to your loan, and charge you much higher rates, often double or triple your normal premium. So, between depreciation, policy non-renewals, and higher premiums, Florida homeowners are facing a perfect storm of insurance and weather risks. And this is exactly why understanding these laws and acting early is so important. If your roof is 10, 12, or 15 years old, you're not just dealing with wear and tear. You're dealing with a system that's designed to shift more cost onto you unless you plan ahead. So yes, this situation is tense. We are in the middle of hurricane season, insurance companies are paying less, and your roof might need your attention before it's too late. But here is the good news. There are steps you can take. Step number 1, review your policy. Look for the terms ACV or depreciation. If you set them, your insurance only covers the current depreciated value of your roof, not the full cost. Step number 2, document any roof damage. Take photos and videos. This helps you request what's called recoverable depreciation, which some insurers will pay after the roof is repaired. Step number 3, if it's possible, switch to an RCV policy. This covers the full cost of replacement without depreciation deductions. Step number 4, if your roof is 15 years old or older, schedule a professional inspection. It costs around $300 to $600, and if the report shows your roof still has at least 5 years of life, you may extend your coverage under the current law. And if your renewal is denied, you can appeal for free through the Office of Insurance Regulation, or temporarily move to Citizens while you explore better options. It's possible your roof is over 10 years old, maybe you haven't checked it in a while. Don't wait for the next hurricane or for your insurance company to tell you they no longer cover your home. At Roofing Nation, we help homeowners with inspections, financing, and full roof replacements, all in one process that's fast, reliable, and stress-free. And this isn't just theory. The last week, we helped a homeowner in Hialeah whose claim was denied under this new depreciation rule. Don't wait for that to happen to you. If this information helped you, make sure to subscribe to this channel and follow Roofing Nation for more updates that protect your home and your investment. We're here to help you even when your insurance won't. See you in the next video.